finance, a la Shmup. What are at the close order and at the opening orders? All right, well, simply put, they're a way of buying and selling stocks and bonds. And they're really a hybrid form of a limit order, only instead of limiting the order of 100 shares of Mickey D's at $45 or better, the quote limit unquote is time-based. That is, it is placed a minute or less from the close of the market, like 3:59 p.m. New York time, or the open of the market, like 9:31 a.m. New York time. Got it? So why would someone do this kind of limit order? Well, if a company the day before had printed what looked like a really good quarter, but upon deep inspection, the investor who owned the shares thought otherwise and, wanted to dump them, well, then that investor would want to take advantage of a high opening print and just sell at whatever the price was a minute or two after the open, making the bet that the stock would then trade down after bigger, smarter, better analysis was published on the stock itself, and then everyone else went to dump it too. So what about an at the close order? Well, kind of inverse of the same thing here. A company's quarter will be announced at 4:30 p.m. New York time, tons of excitement leading up to it, so quote everyone unquote wants to be long the stock ahead of earnings, but you think earnings will disappoint, like, buy the rumor, sell the actual news kind of vibe. So you want to hold the stock until the last minute that day, and then you just give the guidance to sell the stock that last minute of trading or at the close, and you're out. And now we have arrived at the close of this video. Adios.